Hey, we got another awesome speaker coming up next. Will Roundtree is in the building with us today. Will is going to bless us with some words of encouragement. What's going on, Will?
Man, everything. How you doing, Michael?
Man, I am awesome. Hey, welcome to the stage, man. We really appreciate it. And guess what? The stage is yours right now, brother.
Absolutely. Well, first of all, I want to thank you and Brian for putting together this wonderful platform because these type of forums, these type of platforms are needed, for the people, for the community, but just overall, just to be able to showcase and spotlight a lot of us up and coming entrepreneurs. And so I definitely thank you guys for blessing us with this tremendous opportunity. So for those who don't know me, my name is Will Roundtree. I currently reside in Las Vegas, Nevada. I am the president and founder of We Management Services, which our main and primary focus has been credit education. We help small and medium-sized businesses with creative financing and get access to capital. I'm also a two-time author, author of the book Credit is King, as well as full-time CEO. And then I'm also a TEDx speaker, all just an all-around entrepreneur. But more importantly, I want to come and talk to you guys about the importance of and just some basic steps in being able to secure some capital for your business. I believe, the brother earlier had mentioned that, 9 out of 10 businesses usually go out of business. And one of those reasons, unfortunately, happens to be because they can be undercapitalized. And so I wanted to give you guys a couple steps and talk to you one of the easiest ways of being able to secure some capital, because there's a lot of misconceptions of being able to go out there, get some credit for your business, be able to have some operational, capital and all of those things. So the first thing I want to talk to everybody about is there's, a lot of times when people are looking to go and secure some capital for their company, their primary focus of thinking is, hey, let me go get a small business loan. And as we know, most banks do not lend from a small business loan standpoint. Now you have SBA, which, I'll briefly touch on. But when people think about going to borrow capital, their first thing is, let me go and apply for a small business loan. Well, I want to kind of dispel the myth for everyone. You actually statistically will never get approved for a small business loan. Here's why. Because the banks also know statistically that 9 out of 10 businesses are going to fail. So they're protecting their money. Now, it's unfortunate that it's easier to get $100,000 in student loans versus a $5,000 small business loan. But again, we can't get mad at the rules. We just have to learn how to play the game. And so I want to give you guys some of this game and being able to help you play the rules a little bit differently. So there's something I like to call in the banking system, or as some call it, a banking loophole, when you are looking to get capital for your business. And the easiest path of being able to do so is applying for revolving unsecured credit. Now, hopefully everybody are taking notes. I believe a short pencil is better than a long memory, because it's almost impossible to just digest all of this information, especially if it's new for you, and remember it. So I want everyone to take a few notes. And so again, the easiest path to getting capital for your business, whether you're a startup, whether you're a seasoned business, whether you're looking to grow, whether you're looking to expand, you're looking to scale, no matter whatever it is you're trying to do, you need operational costs, capital, you need marketing capital, you need capital to grow your staff, bring in consultants. That's the beautiful part of being able to use revolving unsecured credit, because it's non-discretionary. Non-discretionary means you can use it for whatever. And that's the power of what I'm going to talk to you about. So now a couple things I want us to start. I want everybody to write the word leverage down. And I know Brian talks about this word often. The word leverage is something that we don't use often in our community. Now, we may have used the word we leverage each other. As a friend, I come in and you can leverage me to be able to help you move. You can leverage me to be able to help you go to the club, or whatever, term you want to use it for. But from a financing standpoint, from a wealth building standpoint, I want us to really understand what leverage means. So understanding the easiest path to getting capital or getting the bank's money or as Brian likes to put, to get the bank, not the bag. We're going to show you how to get the bank, is starting with leveraging your personal credit. I can't say that enough. Your personal credit means is one of the largest components that is going to be a determining factor in you being able to go into the bank and be able to get approved for whatever it is you're trying to apply for from a credit standpoint. And I'm going to break that down as we go a little bit further into these steps. So now you may ask, well, what does my personal credit have to look like? Well, the first thing is you want to have a minimum a 700 credit score, anywhere between a 700 to a 720. Now, disclaimer, banks have started to tighten up because of the post-COVID. There was a tremendous amount of fraud. Some banks actually even ran out of some of their money because of the PPP and the idle loans and all of these different things. And so banks have started to tighten up, but it doesn't mean that it's still not easy to get access to the products that they do have. And the reason I position it like that, because some banks have actually pulled back some of their products because their focus has been the PPP, which is backed by the government. So they're backing a certain percentage in case of defaults. So just giving you guys a little bit of pulling back the curtain, because some banks have stopped some of their credit products, whether it was a HELOC, which is a home equity line of credit, which is another strategy we've used to help people get access to capital. Some banks have stopped offering equipment financing. So for those who have businesses where you need to purchase equipment, if you have a restaurant, you need stoves and refrigerators and all of that, you can use equipment lines of credit to be able to purchase those things. And so again, some banks have pulled back some of their assets. But as far as from a personal credit standpoint, you have to be able to leverage your personal credit, minimum 700 to a 720 credit score. Now, a couple other things in the personal credit we want to look for. You want to make sure that you have no collections and no late payments, no collection accounts, no late payments. Now, if you have those things, no need to worry, because here's the beautiful thing about credit. All credit can always be rebuilt and restored at any time. So I don't care if you're going through a bankruptcy. I don't care if you're going through a divorce. I don't care if you have student loan debt. I don't care if you have repossessions. All credit can be rebuilt and restored. Now, I say that because I speak to so many people across the country who have had credit challenges and they just gave up. And I always tell people, don't give up. You just need to find a different strategy. And so, and that's the thing, even when it comes to trying to get capital for your business, we go and try to apply for a small business loan, get denied. Well, we just need another strategy, which is what I'm showing you guys here today. So personal credit, 700 to a 720, no collections, no late payments, obviously no public records, meaning no bankruptcies. And as mentioned, even if you have a bankruptcy, you can rebound from that, because bankruptcies can be disputed from credit reports. If you didn't know that, you don't have to wait 10 years and thinking it's going to fall off, so you can actually dispute that information, and you can dispute anything negatively reporting on your report, not for the sake of saying it's not yours. You're disputing it on the premise of it not being reported accurately. And when you dispute that information ethically and legally, and if they can't show validation that they're reporting it accurately, they have to remove it. Now you may be saying, well, Will, what does accurately mean? Well, if they can't provide proof of that debt down to the penny, they have to delete it off your report. If they can't provide proof of the actual last date of activity of the filing of that bankruptcy with the public courts, then they have to remove it off of your credit report. So understand, knowing these different strategies will put you in a better place to be able to play the game. Okay, so no collections, no late, 700 to a 720 credit score, no public records. Another thing, credit inquiries. What are those, Will? Well, anytime you go and apply for credit, you're going to get a credit inquiry. Now, did you know having more than 3 credit inquiries in a 6-month time span is deemed as excessive by the banks? Now, that's only applicable when you are applying for unsecured credit. And I'm going to break down what unsecured credit means here shortly. Meaning, again, if you have a 750, if you have an 800, and you've been out car shopping and you have 25 credit inquiries, because when you go to a dealership, they're trying to shop your loan to see how they can make the most money and interest sometimes. Not all dealerships, but some. And in the small print that none of us ever read when we're applying for an automobile loan, it says they have the right to shop your credit application and shotgun it as many as 7 to 15 times per dealership. So be careful, which is why I always recommend for those who are in the market to look for a new automobile, always go to the dealership with your own financing, because what you don't know can hurt you, and it usually will. So that's why I always recommend, you want to minimize your credit inquiries. Now, here's the thing. Let's say you have all of these components in place, but you have too many inquiries. Guess what? Those can be disputed as well. That's right. Credit inquiries, hard credit inquiries, can be disputed. Now, there's a difference between a hard credit inquiry and a soft. A soft credit inquiry is anytime you pull your credit yourself, that is considered a soft credit pull. It does not impact you. And the reason I want to point that out is because I've talked to people all the time who's scared to pull their credit. You can pull your credit every single day, 5 times a day yourself on one of the credit monitorings, and it does not impact you. But anytime you get your credit pulled for the purpose of being extended credit, it will be considered a hard credit pull. Okay, so now 700 to a 720 credit score. And I always like to recap. No collections, no late, no public records, no more than 3 credit inquiries per credit bureau. Last thing is you want to make sure that your age of credit file, well, last 2 things, are at least 3 to 5 years old, as well as you want to have a minimum of $5,000 of revolving credit already. 10,000 is even better. Well, it's actually 3 more things. No more, your minimum of 5 to 10,000 of revolving credit, and then your age of credit file, meaning your overall credit file age, is at least 3 to 5 years old. And then the last one is your credit usage needs to be at around 10% or less. Now, what does credit usage mean? So you take the total amount of credit card limits that you have. So let's say you have a total of $10,000 of credit card limits. Anytime you go over 30% of that, which is $3,000, is going to impact your score. Now, the further you go past the 30%, it impacts it even more. So let's say you have $10,000 of limits, you're using $9,000 of it. That is a 90% credit usage, which means your score is going to drop tremendously, which is going to make it difficult for banks to want to approve you credit. See, banks grade you very stringent on the credit that you already have. So even though you can have that 750 credit score, you have 25 credit inquiries, and you have your 90% credit utilization, every single bank is going to deny you when it comes to unsecured credit. Just know that. And I say that because I talk to people all the time who run into the banks, try to apply for a credit card, and wonder why they're getting denied. So you want to make sure that your balances are at about 10% or less. Now, 30 is kind of the benchmark, but who wants to go into the bank being average? You want to go in there being great. So that 10% or less, which means going back to that $10,000 overall credit limit, 10%, which is being $1,000 or less in balances, that means your credit profile is golden, or what the banks like to call A paper. So once you have those things in place, the next thing you want to do is make sure that you have a business, an entity set up, whether it's an LLC, a S Corp, incorporation, it's up to you. Now, I recommend you speak with your tax strategist. You guys just so happen to have one of the best in the nation on here, Brian, who I, highly recommend. I send all my clients to him and his team. And so once your business entity is set up properly, it's registered with the state, you have an actual EIN number, it's active. I always have to highlight that because I talk to a lot of people who have these LLCs, but didn't know they had to pay the annual fee every year, depending on what state you live in. So once your business entity is set up accurately, it's bank compliant. And I'll give you a couple things what makes your business bank compliant. One is making sure that you have a business address, you have a business phone number, you have a business email address, not a Gmail or Hotmail. You want to go invest $9.99. Go to one of these domain web server or places where you can purchase a domain and set up a professional email. Banks are looking at you as a professional. They want to see that you're actually running business as a business. So you want to make sure you have a professional email address. On top of that, you want to have a website. Now, I can't stress the importance of having a website. A quick story. I had a client who I took to one of my bank partners, and he had a conditional approval for a $50,000 line of credit for his business. $50,000. Well, after the bank and the underwriters did their due diligence, went and did a Google search, because underwriters will do a search on your business, found out he didn't have a website, and they actually rescinded that business line of credit for $50,000. So I like to share that story because sometimes as entrepreneurs, we want to cut corners. We're trying to hurry up and get to the money, not doing all of the necessary compliance steps to put us in position. Because here's the thing, and I often talk about being in position. I have something called my 3 Ps. You want to be in position to have the power to purchase. I'm going to say that again. You want to be in position to have the power to purchase. Now, the good thing about once you're in position for a lifetime. Now, even if you get out of position, at least you know the steps you need to do to get back into position, or at least you know how to get your business partner in position, how to put your spouse in position, how to put your children in position. That's how you guys collectively and can come together and collaborate with this thing called group economics. So imagine if you had 3 business partners and all of you guys had access to $100,000 each in unsecured credit. That's over $300,000 that you can use to leverage for your business. And so, and I could talk about this all day, but I know, I want to hit some of these certain points. So going back to the business compliance, you need, again, the email address, the phone number, the business address, the email domain, the website. And then lastly, you want to make sure that your business is registered on some of the online directories. Now, you can submit for a free one going to like yellowpages.com, yelp.com, google.com. And the reason you want to do that is banks, again, like to do actual, verifying to see if you're a legitimate business. Now we can't get mad. We just got to learn how to play the game. And the reason the banks do that, keep in mind, it's their money. They're trying to protect their interests. Just like if I came to you asking to borrow $1,000, I'm pretty sure you're going to check my level of credibility to see if I have the ability to pay you back. And that's the exact same way that banks think. So now, once you have all of those things in place, now, because again of post-COVID rules, and I'm giving you guys some new post-COVID strategies and being able to get in position. Now banks have this thing called KYC, know your customer. Banks want to now be in business with you before they say, hey, we want to open up our lending portfolio to you. Now, there's multiple different types of unsecured credit that you can apply for. You have a credit card, you have a business credit card, you have business lines of credit, and you have what are called personal installment loans. Now, let me unpack all of those. Now, first, going back to what is know your customer. Know your customer is banks want you at minimum to have a bank account with them, at minimum. Now, you may sit back and say, well, Will, what does that mean? Well, essentially, that means that they want you to have some type of commerce with them. So I always recommend whenever I'm sitting down with the client and they're going through this strategy of building up some capital for their business expenses, go to your 5 nearest banks and go and open up a business bank account with them. Go to the 5 banks, and it can be a credit union, it can be a bank. First of all, find out, do they have any business credit products first? Because you only want to work with banks that have credit products. Now, another thing to keep in mind, it doesn't always have to be the big commercial banks. You'd be surprised the type of lending that some of these smaller credit unions are throwing to people, because that's the only way they make money is by lending money. So go to the 5, nearest banks in your vicinity, open up a business bank account. and you want to let those accounts mature for a minimum of about 90 days. By doing so, what you're doing is you're showing the banks that you are vested with them. And that is what's called know your customer. It's actually something that they started doing as far back as about around June or July of this past year in 2020. So building that relationship with those banks, making sure your business entity is bank compliant, getting your personal credit in position and being able to leverage that. Now you can go and start applying for their credit products. Now let's break that down a little bit. And I talked about the different type of credit products you can apply for. Now I understand a lot of people are always saying, hey, I want business credit. I want business credit. Well, I don't even really like the term business credit, and I'll tell you why. When people hear business credit, they associate that with, let me go and try to get some money from the bank without using my social security number. Well, the first thing I want to tell you is every single bank is going to ask you to put your social security number on the application. I'm going to repeat that again. Every single bank is going to ask you to put your social security number on the application. Now, one may say, well, Will, I got something in the mail that said they can get me all of this money without my social security number. And you're absolutely right. And let me give you guys some information on those type of lending. So now you have what are called MCA loans. Merchant cash advance loans, MCA loans, merchant cash advance, or short-term accounts receivable loans. And this is where essentially, no matter what your credit score looks like, as long as you have bank deposits and bank statements, a bank can give you a minimum up to 125% of your average running monthly balance or deposits or accounts receivables. So now, what does that mean? So essentially, you can go to one of these lenders or these lending institutions, provide your bank statements. They don't run your credit or do anything, and they'll loan you some money. So now, well, Will, how is that a bad thing? Well, I'm glad you asked. So with these MCA lenders, essentially how it works, it's a short-term loan. And the interest rates are anywhere between 30 to as high as 250%. I'm going to say that again. The interest rates are as low as 30 and as high as 250%. So companies like Cabbage, companies like Fundbox, and a couple other companies out there, it's a million of them that are popping up. And a lot of them sprung up even more after the pandemic because they knew a lot of small businesses were in, kind of in a desperate position. And so with that being said, you will go and borrow money against your bank reserves. They'll loan you, $30,000. And then you may have an average of a daily repayment of $600 a day. I actually had a client who borrowed about $70,000, and his daily payment was $1,500. His daily payment was $1,500. So I say that because I want people to be able to stay away from those type of companies and understand there's an easier path of getting access to capital, and it is revolving credit, unsecured credit, i.e. being credit cards, business lines of credit, or even installment loans. Now, understand it's all bank money. It doesn't matter. As long as you have a vehicle to be able to park that capital and being able to service the debt. Now, it's a strategy on how to use the capital because you want to make sure your credit usage isn't too high. But just understanding that strategy. Now, a couple last things before I wrap up here. Now, one may say, well, Will, what's the difference between a credit card and a line of credit? So a credit card, everyone is familiar with that. That's something you can swipe. And the thing about having credit cards for your business, you can use it for probably 90% of your purchases. You can use it for inventory. You can use it to possibly pay your rents. You can use it to pretty much fund anything around your business. Now, some may say, well, Will, how can I use it to pay my payroll? There's strategies around that too. And these are some of the things that we teach people here at our company is how to actually use the credit for all operating expenses. Now, a business line of credit is where they give you a line of credit and you can walk into the bank and draw off of that. So if you get a $10,000 line of credit and you need $3,000, you can walk into the bank and get the cash, or they'll give you checks or an actual debit card attached to that. Now, a couple things associated with the business line of credit. Obviously, they're going to look at your personal credit. Secondly, they're going to look at your business entity. Thirdly, they're going to look at your taxes. I can't stress this enough. You make sure that you file your taxes properly. Now, I know I'm probably preaching to the choir because I'm sure Brian has broken this down to most of you, but I want to just give you some data points in relation to applying for credit. Now, one of the biggest mistakes I see a lot of business owners make, small and medium-sized businesses, and a small and medium-sized business is classified any business making less than $30 million annually. So that pretty much calculates 99% of all businesses. So one of the biggest mistakes I see small businesses make is they expense everything. You made 100 grand, you write off 90, then your net is $10,000. But you go into the bank and you're filling out a credit application and you say you made 100. No, you made 10,000. And how banks calculate bank approvals when it comes to business lines of credit is usually they do anywhere between 10 to 20% of your net revenue for your business. So if you're showing you only did $10,000 in net, revenue, then your business line of credit can only cap out at about $1,000 when it comes to a business line of credit. So we want to be very careful to make sure we are not expensing all of our expenses. See, in the game of business, it's the cost of doing business. You have to pay to play, as they say. And if you're going to let paying $7,000 in taxes stop you from getting $100,000 to $150,000 to $200,000 in capital, well, I would like to say you're probably in the wrong business. You want to be able to understand that it's the trade-off of being able to play at a higher level. So now the last thing I want to leave everyone with is the reason and the power of revolving credit, unsecured credit, couple different things. One, when it comes to credit cards, business or personal, you can use what's called stated and household income. Stated and household income, which means that most banks don't verify the income. So I've actually had clients who were not even working, who was able to use household income, which means on the application, they can put the combined income coming in for everyone living in the household and still got approved for credit. Another strategy is that it's unsecured, which means you're not collateralizing your business. See, when you go and get an MCA loan and when you don't pay it back, they put a lien against your company, which means you pretty much can never get money for your business again. Most banks may not even give you a bank account. So you want to be very careful. Plus, they're going to sue you. So when it comes to revolving credit, unsecured, uncollateralized, and then non-discretionary, which means you can use the capital for anything. Now, when it comes to business lines of credit, yes, you do have to show documentation of your revenue. They're going to ask for tax returns. They're going to ask for your personal credit information. So now, once you have all of these things in place, this is where it gets fun because now you can play the game at a higher level. Did you know if you have multiple LLCs, you can go to each one of those 5 banks and apply for capital for all 5 of those LLCs? Did you know, let's say your personal credit is not in position. You can then use what's called a credit partner. And having a credit partner essentially means someone who you can put on your business, add them to your LLCs, multiple, and then go to the bank and leverage their credit to get capital for your business for operating costs and operating expenses. So that's the beautiful part of credit. This is the thing that I want people to know. And the last thing I want to leave off with is that understand we're just playing the games that the banks play with us. What do I mean by that? So, when I first started to really see that the banks really use our money to invest, and I said we need to be able to flip it and use their money to invest in our dreams, in our products, in our businesses, in our investment properties. I went to the bank and I tried to pull a sizable amount of capital out. And they told me, they said, Will, we need about a 2-day notice because we don't keep that type of money on premises. And I'm like, hold on. It clearly shows in my bank ledger that I have that amount of money, but you don't have it available. And you guys are a commercial big bank. And then it dawned on me because they invest our money. They take our money to invest it, and then we have to give them a notice to go and get our own money from the bank, depending on the dollar amount it is. So once I realized that, I said, I'm only playing at a level where I'm going to leverage their money. So I don't care how much money I have in the bank. I'm always going to use the bank's money to be able to invest in businesses, invest in my company, in the growth of my company, in my marketing, and paying my staff and paying contractors, investing in real estate properties. I'm always going to use the bank's money. So once you understand how simple it is to secure the capital, how simple it is to become your own bank, it's almost impossible for you not to be successful, at least mitigating your, the mitigating defaulting in business, because now you should never have a capital issue. And again, as mentioned, no matter where you are, personal credit position wise, just take the time to get it in position. And even if it takes you 2 years, just know once it's in position, you're in position for a lifetime to be able to go out there and get access to the bank's money. So I appreciate you guys' time. You guys can follow me across all social media platforms at Mr. Will Roundtree. Again, Michael, I appreciate you. Brian, I appreciate you guys, and look forward. And I have my exhibitor booth out there, so you guys can go and book a free consultation with my team, and my team